Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly analysis for gold. Gold's on a tear. The price of gold versus the US dollar. It's August 2nd, 2020, 11:13 a.m. Eastern Daylight Time? Summertime? Standard Time? If you want to stay up to date with all our videos, make sure you click subscribe on that red subscribe button. Okay, so gold, no secret, very bullish to 2,000. I think we're going to see at least 2,000 before we see people cash in their positions. I do want to point out, though, my warning here, watch out for the retrace. So whenever price moves this far away from the base trend line and this far ahead of the fast-moving average, eventually it has to come back down and retrace. It does not mean the uptrend is over. It means that the uptrend has to consolidate before it can move any further. Okay, just need some rest. So I'm not saying it's going to happen right now or this week, but watch out because it's coming. So I'm thinking we're going to see a touch 2,000, could be even a reaction a little bit higher, and then we're going to see a massive pullback, which is good news actually, because then everyone who missed out first time can get back in closer to the 1850 mark. So I'm really looking for is price represented by these candles and this line representing the moving average to catch up to each other. And that can happen one of two ways. Either price stays still and it kind of hangs there, maybe trails down a little bit, or just kind of hangs sideways. This moving average catches up and then boom, you buy again. Or price slowly declines because people do some profit taking. So it's not that the trend is going down, it's that people maybe who are holding since 1200 said they have their limit set at 2000, right? And that has a lot to do with psychological numbers. Oh, I'm holding this all the way to 2000. Now, if you remember, the last high was 1925, so we've already eclipsed the last high back in like 2011. If we look at that on the weekly, now look at that weekly chart, okay? So there we go. There's the last high in 2011. Now we've exceeded that. Now, if we look at our candles, like candlesticks, that's pretty super bullish. But every time, let's go all the way back. Anytime there's a major bull run, price moves away, it kind of hangs there and goes, dies back down, and then you buy again once price touches the moving average. So this is the weekly. And you can see it works just as well. Price nestles into that fast-moving average. Sometimes it moves below, and then you get even a better buy. So you don't want to use it as a way to set your support and resistance, but it's a way to tell how long is the current trend going to last. Okay? So this is imagine this is the initial volatile phase of the trend. And this is the long-term trend in channels. Boom. See how that lines up really nicely? Right? All these candles all the way along, years and years and years of price action, they honor that line. That doesn't happen. That's not an accident. Okay? So, just like we see that happen in the past, we can rely on that to happen in the future. Now, we don't know when it's going to touch it, but we know when price, if it's on an uptrend and price comes back down and meets this fast-moving average, boom, that's your next year's buy. If you would have done that the last two times, right, back at 1,700 or 1,500, you've been way in the money now. So you got to be careful. The further this moves away, as a pro trader, right, as you sharpen your skills, you want to wait for the best buying opportunity. So here, way back here at 1750, once you see price moving above its last resistance, you're like, oh, you can also get in there. It's also a good buy. You've kind of missed the moving average buy, but you've proven there a new high is occurring. Buy there. Here, yep, everyone knows it's going up and up and up, but that's usually when the people who aren't pro traders hop in, and then right about then is when price recoils. And everyone's sad because the thing is going down. It's not. But then the pro trader knows, I'm going to wait till it comes back to 1750, maybe this 1875, depending on how things go, and then I'll buy, right? So a great way you can tell about where's price going to land in the future, if it's way ahead of your trend line, is you draw this parallel channel and say, okay, if this angle worked for this many years, this trend angle, it's going to work in the future. And all you can go is off of what you already have. So really all I can go off of is this. Candlesticks here, they close below this line. It lines up with this bearish candle way back here. So price, right? And so now you can kind of see this picture forming. Price is going to cool off, come back down here, maybe dip right there. Moving average is going to catch up, and there's your next buy. All right, everyone. I hope you have a great week trading. I hope you make lots of cash. Talk soon.